Stopping the sell-off. After the longest weekly losing streak, the Dow snaps back. In today's cover story, ahead of earnings, Apple rolls out a new way to pay. Plus, women in wealth. Females are making more investment decisions, so why are they lacking confidence? And NASCAR's hurting for ratings. How America's loudest spectator sport plans to win back fans. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. It's Monday, October 20th. I'm Chuck Coppola in for Angela Miles. In today's First Look, what a rebound. Solid earnings news and positive housing data helped the market bounce back after a wild few days of trading last week. The Dow soared 263 points, turning around from a steep drop earlier in the week. The S&P 500 added on 41 and the NASDAQ 24. Gold slipped $3 and oil traded up 35 cents. Russia is downgraded. Lagging economic effects due to the conflict with Ukraine, along with sagging oil prices, has caused Moody's to cut Russia's debt rating. And a healthy Halloween could be in store for retailers. The National Retail Federation says Americans will spend $7.4 billion on Halloween as more kids, adults, even pets get in costume. Trader Brian Battle of Performance Trust steps in for Trader Talk this morning. Brian, are we in for another roller coaster week this week?
Boy, Chuck, everybody's coming in this morning. We'll see how many survivors made after last week, crawling in after the disaster and the murder and the mayhem of last week. We had a big move in the market, and the volume was massive. That was the thing that might be getting lost in the coverage. So big move last week, and I think the answer is yeah, we have the probability of having that again this week because all the things that caused the sell-off last week are still in place. The longer-term things like what are the central banks going to do? Hey, is there growth in Europe? And what about the price of oil and the shooting war in the Middle East? So none of those things have changed. We have a chance to have another roller coaster this week for sure.
Do you think it's more of a hiccup, another air pocket, so to speak, or is it more of worse things to come?
Yeah, it's unusual in is that it hasn't happened for so long. We used to have really big market moves, so the fact that it was this big and this deep was a surprise. But I don't think it's an air pocket. I think it's here to say, hopefully, there's no way to run a market. You'd like it to be more efficiently priced and everybody has all the information. But this winging around is a trader's market. It's not an investor's market. So you just have to keep your hat on and make sure you know what your strategy is.
All right, Brian, the Consumer Price Index is in focus this week. What are you watching for?
Yeah, the CPI is a big number. The Federal Reserve really isn't looking at unemployment so much anymore. The U.S. Federal Reserve, they're saying, hey, we're looking for signals of inflation. So we're going to be watching what CPI says to see if there's any kind of reaction out of the Fed.
Any Fed governors tip their hand?
Yeah, last week, Jim Bullard, who's the St. Louis Fed, on Friday during TV said, yeah, maybe we should slow down this quantitative easing thing and maybe we'll take our time raising rates. That put about 300 or 400 points in the Dow Friday afternoon. So everybody is very much watching the Federal Reserve, and the Fed has their thumb on the scale. They're holding rates down, experimental monetary policy. So as they leave the market, our exit experience is going to be experimental also. So we're very cued to what the ECB says, Central Bank of China, and certainly the U.S. Federal Reserve.
All right, Brian Battle of Performance Trust. Have a terrific week. Thanks very much.
All right, Chuck, thanks.
President Obama's newly named Ebola czar, Ron Klain, begins his new responsibilities coordinating the nation's response to the outbreak of the virus. Klain is a former chief of staff to Vice President Joe Biden. One of his new jobs will be to help coordinate hospitals around the country increase their Ebola preparedness. In Chicago, Rush University Medical Center has formed an Ebola task force, whose doctors and nurses are volunteering to treat Ebola patients. It's one of the hospitals designated by the Centers for Disease Control to do this. Diane Mocha joins us ahead of a very big day for Apple. Good morning, Diane.
Good morning to you, Chuck. In today's cover story, Apple Pay is on the leading edge of a new era of mobile payment as Apple introduces iPhone 6 users to a quicker, easier way to shop in brick-and-mortar stores beginning today. The promotional push for Apple Pay will likely pay off for other companies poised to release similar options next year. More than a month after the release of the iPhone 6, consumers are still lining up to get one.
They're back in stock. They've been out of stock for quite a few weeks.
Among the features drawing the masses to the new phone is Apple Pay, a way to make purchases in person without cash or a credit card. Simply wave your phone near the store's sensor, verify your identity with your fingerprint, and the card you've set up gets charged.
They're really using 12-year-old contactless technology to do it, and it's missing some of the big improvements that are thought to come with mobile payments, such as loyalty and activating offers.
While Apple Pay is similar to Google Wallet and retail apps like Starbucks Mobile Payment, experts say those received only lukewarm response.
The problem with those other initiatives was that there was nobody really driving it and nobody with a big brand that was putting this stuff front and center on the device.
Though only available at about 200,000 locations, or 3% of the U.S. retail universe, Apple Pay has signed on McDonald's, Walgreens, Whole Foods, and other big names, and provides a way to pay without sharing a credit card number or even your name with the merchant.
The only thing that's shared with a retailer when you make a purchase through Apple Pay is a one-time token. The kinds of hacks that we've seen in the past will not happen if you're using Apple Pay.
Experts say that will get many more people to adopt mobile wallets, paving the way for future systems in the works by big box stores as well as banks, both set to launch next year.
Watch for the financial institutions to take advantage of the education and promotions and incentives that Apple is putting forth.
Apple last closed at 97.67, up about 1.5%. Apple Pay hits the streets today, the same week the new iPads go on sale in stores and on the heels of Apple earnings. The tech giant moved up its expected earnings announcement by a week, prompting analysts to expect a higher earnings report.
Ahead of Apple Pay, President Obama issues new security for government credit cards. Friday, the president signed an executive order for federal payments to begin using so-called chip and PIN cards instead of older magnetic stripe cards. This comes as a new report finds holiday shoppers this year will be wary of stores affected by data breaches that involved magstripe cards last year. Creditcards.com reports 45% of shoppers surveyed will avoid retailers where consumers' information had been stolen. That includes major retailers such as Target, Home Depot, and Neiman Marcus. Matt Schultz of Creditcards.com says the hack attacks may have more shoppers using cash this season.
48% of the credit card holders and debit card holders that we asked in our survey said that they would be more likely to use cash. And that's a perfectly rational move to make in the wake of all of these data breaches.
Home Depot, Target, Walgreens, and Walmart say they will all install more secure chip and PIN card terminals in their stores by January of next year.
Microsoft CEO Satya Nadella is going beyond another apology for widely criticized comments he made that women should not ask for raises. In a company-wide memo, Nadella said, "We must ensure not only that everyone receives equal pay for equal work, but that they have the opportunity to do equal work." He also vowed to recruit more diverse talent to Microsoft at all levels of the company. Currently, women comprise 29% of Microsoft's workforce and 17% of its engineering and management staff.
Federal Reserve Chair Janet Yellen reaffirmed her concern about the continued rise of income inequality. At a conference on the subject sponsored by the Boston Fed, Yellen said it is appropriate to ask whether this trend is compatible with values rooted in our nation's history. Among them, the high value Americans have traditionally placed on equality of opportunity. Yellen conceded that some inequality contributes to growth because it rewards hard work and risk-taking, but that too often outcomes can make the gap wider, limiting opportunity.
The Fed meets this week to talk about banks and risk. Wednesday, regulators will finalize a critical rule to Dodd-Frank reform. At issue is how much risk banks are required to keep on the books. Shoddy mortgage loans helped spark the financial crisis in 2008. Since then, regulators have been trying to balance risk within the financial system. However, banks say too much regulation could hurt the housing recovery. Meantime, banks are lending big money to apartment developers. Lenders have given $172 billion in new mortgages for apartment buildings in 2013. That's up 18% from 2012.
The IPO calendar got a jump start on Friday with Zayo. The fiber network company opened below range at $19. Shares surged 20% by mid-morning, though, and closed up more than 3 points at just over $22. In Europe, British shoe brand Jimmy Choo priced at the bottom of its range at £1.40, or $2.24 a share. It's a bright spot for the European IPO market, where two companies pulled their IPOs due to market conditions. Coming up this week, Wednesday brings banking group Fifth Street Asset Management and biopharm company Proteon Therapeutics.
Earnings from a few major players are bright spots in the turbulent market. On Friday, Morgan Stanley's profits jumped 83%, beating estimates and benefiting from a reorganization of the bank after the financial crisis. Shares closed higher at $33.21. General Electric earnings also beat estimates, with profit rising 11%. boosted by sales of its jet engines and spin-offs of its consumer finance arm and appliance division. Shares closed up at $24.81, and Honeywell earnings rose 18%, driven by sales. Shares closed more than 3 points higher at around $90.
Investors have high hopes for Chipotle. The burrito chain reports third quarter results today, and Wall Street expects earnings to rise 44%. Sales and revenue are also expected to pop. Jason Moser of the Motley Fool says Chipotle spends more on high-quality ingredients than other chains such as McDonald's or Yum Brands.
What that does, obviously, is result in a more quality offering, and consumers tend to like that. They respect it, and obviously, it's a quality offering that keeps people coming back for more.
Moser calls the stock a buy and hold due to Chipotle's expansion plans. The stock traded last at $641.
Some colorful changes behind the counter at Starbucks. The coffee chain is reversing its policy against tattoos. Starting today, showing ink is okay, as long as it isn't offensive or above the employee's shoulders. But purple or pink hair, not okay. As for blue, only if it's natural and you're elderly. It's part of the Starbucks revised dress code and comes with a bump in starting pay beginning in January. Changes for customers too. A new mobile app will allow you to pre-order and prepay. Look for it nationwide next year.
On the earnings calendar today, look for numbers from Whirlpool, Royal Caribbean Cruises, Gannett, Halliburton, Apple, Hasbro, Texas Instruments, Valiant Pharmaceuticals. Still to come, what traders are watching for in Apple's earnings report. Plus, NASCAR sets its sights on a major market to pick up new fans. And after the break, why some women say they are facing an unprecedented problem when it comes to money management. First Business continues right after this.
You know, in the Leave It to Beaver era, if you believe what was on television, a woman's place pretty much was in the home. Never would June Cleaver concern herself with the family's financial matters. Obviously, women have made great changes and strides since then, but there is a poll out by Prudential that finds that women still do not feel fully confident when making financial decisions. Judith McNiff is the first vice president of investments for Wells Fargo Advisors. Judy, what do the numbers tell us?
Well, surprisingly, 53% of women are now the key breadwinners in a household, and often not by choice. They've been forced into that position because of the economic downturn, or there's just more people are divorced, more single women are out there.
And you told me, and this was kind of hard to believe, that women are in fact less confident today than they were 10 years ago. Is that true?
Yes. Isn't that amazing?
What would account for that?
Several things. Women are risk averse anyways. We tend to be more savers and investors, put the money under the mattress. We're afraid of losing money because we're not confident that we can make good financial decisions. So that's the first thing. They do need to invest in a better diversified portfolio. They're not confident, they don't feel comfortable sitting down with a financial advisor. I think they think that maybe they cost too much, they don't have enough money, there might be an issue of trust in there too.
Oh, with the Bernie Madoff instance.
Yes.
Now, you must talk to women all the time who need this kind of advice and are not making the good decisions until they walk into your office.
Yes, I have 3 tips, 3 investment tips. Invest in yourself. Sit down and partner with a planner. Invest in a diversified portfolio so your money will grow. And invest in your future. Set up a plan. 95% of your success is simply having a plan.
You had a woman you were saying in your office who, what was she, in her 70s and hadn't really made any
just turned 70. She had getting ready to retire. She had never worked with someone in the past. That's kind of like saying, my house is on fire. I better run out and get some homeowners insurance.
All right, Judith McNiff, thanks so much.
Thank you.
Thanks, Bill. Coming up, a big week for earnings. One trader gives us a breakdown of what he's watching in Chart Talk. And after the break, popularity for NASCAR is stalling out. How the brand is trying to crank it back up. We'll be right back. NASCAR has come to a fork in the road. Despite the sport's most popular driver winning NASCAR's biggest race and the sport's improved level of competition, television ratings are in the tank. Crane Chicago business reporter Danny Eckert takes a look at how NASCAR is trying to win fans and the challenges of trying to build a base in new markets such as Chicago.
3 years after NASCAR moved its opening race in the chase for the Sprint Cup to Chicago in hopes of growing its fan base in the nation's third largest market, Chicagoland Speedway is still pounding the pavement to make an impression on local fans. While the share of Chicagoans who say they are interested in the sport has dropped to 18% from 26% in 2008, according to Nielsen Scarborough, a slightly steeper decrease than the national trend, track president Scott Paddock says he's seeing signs of progress.
We've sold out of all of our premium hospitality opportunities for the first time ever. We're up year over year coming off of a rain-plagued event, so I look at that as affirmation that we are doing the right thing.
Attendance at this year's Chicago Sprint Cup Series event, the venue's most prominent race, jumped by 5% year over year, according to Paddock, who declines to disclose exact ticket sales numbers. It's a welcome sign for a track whose ticket revenue from the Chase event has been marred by rain 2 of the past 3 years. One centerpiece of NASCAR's strategy to grow interest in the sport has been trying to stay on casual sports fans' radar with things like this Chase Grid Live event downtown. It's a tactic Paddock uses to try to garner sports media attention to help amplify his message to new fans and sponsors.
Chicago is a very competitive sports and entertainment market, but it's one that also affords you tremendous resources and opportunities. Access to Fortune 500 companies, access to a plethora of media outlets, and if you're willing to be innovative, creative, a bit disruptive, and roll up your sleeves and go to work, you can make an impact, and we're seeing that impact over the last 3 years.
Paddock chalks up the decline in NASCAR interest over the past half-decade to the advent of the car of tomorrow, the sport's safety-conscious car whose boxy design and poor aerodynamics has made it more difficult for cars to pass each other. Both he and NASCAR executives are counting on the newest model of the car helping to improve the action, as well as the new format of the sport's playoffs called the Chase Grid, a more understandable bracket-style concept that it hopes will help new fans get hooked.
We've simplified the process. We've made it easier for those casual fans to understand, and it's as simple as that. And that's only going to continue to grow in terms of growing interest in the sport.
Another move to drum up interest at the Joliet track is adding more non-motorsports events to its current slate of 130 days of activity per year. Things like endurance races, music festivals, and corporate gatherings. This December, it's planning a 35-day Winter Lights Festival with an eye on giving first-time visitors a taste of what the track has to offer and hoping they'll come back again.
You know, when you've got 1,300 acres of real estate, lush green acreage, located at the epicenter of major highways and arteries, you've got to leverage that opportunity, and that's what we're trying to do.
Our thanks to Crane's Danny Ecker for that story. Well, coming up, one trader says the stock market is starting to look very scary. Plus a preview of Apple earnings. Stay with us. In Chart Talk this morning, we're speaking with Dan Deming of Equity Armor Investments. Dan, you're keeping a close watch on the Russell. Tell me what you're seeing.
Yeah, interesting, Chuck. Last week, we actually saw the Russell up 2.8% for the week. Now, of course, that sector has been beaten up pretty hard, those small caps. But nonetheless, we did see at least last week an uptick in the Russell where it actually did close up almost 3% on the week.
Is it an indicator of sorts?
Yeah, I mean, we feel that we factor that into our decision making as far as when we're analyzing the market as overall, and certainly we felt that the Russell was a leading indicator leading up to this down move, where it had shown weakness coming in to this October down move. So the fact that it did at least find a temporary bottom here, I think, actually helped support the market on Friday, and we'll have to see if it will continue this week.
All right, as we've mentioned, Apple earnings are out today. What are you looking for in its report?
Well, I think, right now the key with Apple is not so much kind of what the numbers were, which are probably going to be pretty positive. It's going to be the guidance going forward and really what the expectations are now with all the new products coming online. I think that's going to be the key and how the stock's going to react post-earnings announcement.
Will this earnings report factor in the new iPhones, other devices that it's been rolling out?
Well, I think that that's going to come in the guidance, Chuck. I think that, I think it partially probably has been factored in. It's been priced in a little bit because some of those numbers have been released. But ultimately, I think it's going to be how they're going to look at the next quarter moving forward and how the stock's going to perform.
Any other earnings you're watching this week?
Well, yeah, I mean, you have IBM coming out today as well, and Chipotle. Those are some of the early ones for this week. And, of course, this is going to be a very earnings-heavy week, coupled with the CPI, I believe, comes out on Wednesday. So there's some other items out there. I mean, I find it interesting, Chuck, that the fact of the matter is that, you know, the things that weren't so scary just a few weeks ago have all of a sudden put their Halloween mask on, and you're seeing the market react very differently to what how these news items come out. So I think that's going to continue as we roll towards Halloween.
Dan Deming of Equity Armor Investments, thanks so much.
Thank you.
Well, that's our show for today. Coming up tomorrow, one lawyer calls it the last standing taboo in relationships, how couples can overcome their fears about the money talk. That's on tap for tomorrow. From all of us at First Business News, thank you for watching.